Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming to you with the market recap for Friday the 17th. Another week has come and gone. Pretty volatile day in the market. Gap down early on the open, fought back, and then gave it all back by the end of the day. As nobody seems to, the trade uncertainty has not gone away, right? So, good afternoon, everybody, and welcome out. I hope you had a fantastic day, both in and out of the market, as we move into a weekend. I think maybe the market was looking forward to this. It seemed like today just kind of wanted the day to end, but there was going to be a little selling before that happened, closing, near the lows of the day, as we'll see as we get into the S&P 500. But quickly, before we do that, looking ahead to next week on the earnings front, not a particularly heavy week, but we do have quite a few things over in the discretionary type of sectors coming out next week. We've talked about it a few times this week. You've got a Home Depot, you've got Advanced Auto Parts, AutoZone, Lowe's, Kohl's, Nordstrom's, TJ Companies, not TJ Maxx, Target, Ross. So we've got a lot of names out in the consumer discretionary. We'll want to keep an eye on that as we work through next week. That's really where the heavy amount of S&P 500 companies, at least, will be from as they report here next week. And good afternoon, Pascal. Great to see you, my friend. Had an opportunity to meet with Pascal the other day. It was a good time chatting with you, and I hope you are doing well. Moving into the market. Good afternoon, Diane. Welcome out. Great to see you. I hope all is well. Hope you have an exciting weekend planned. Looking at the S&P, I mean, we gapped early, just right back into, business as usual for us now, right? We're gapping one way or the other on the open, but much like we've seen so many times this last little while, buyers were quick to step back in. And part of it was probably because we had this upward trend going on, but that's just kind of been the way the market's really been behaving as of late. Rallied really strong, and then as you can kind of see throughout the course of the day, just kind of faded. Little more selling the last hour or so of the day as we really kind of close back near the lows. This will be something we can keep an eye on. I don't know if any of us actually believe that it's not going to gap on Monday, but we'll have to see. Who knows for sure? But we can keep an eye on this little support zone. If that gives out, that could be a little bit of a sell signal for the bears, at least the intraday players. As we look at the hourly chart, we can see that price in play once again. We're kind of still in that potentially upward move, right? We were able to kind of recapture some higher highs and higher lows. And at least as of right now, we were able to hold them on this hourly time frame. We're hanging out, we're close. We're knocking on the door here, but we did hold that. I think we need to kind of see, and we talked a little bit about it yesterday, I think even more so here today. I think we need to kind of push back above these highs from yesterday to kind of get a little bit more technical momentum to the bullish side. Again, we just have to keep in mind that right now the trade war stuff is just not going away because maybe we'd like it to. So looking at this on a daily chart, on a positive note, we held support. That matters, in my opinion. It certainly does. On a negative note, we gave back those moving averages that we recaptured here yesterday on that nice movement to the upside. So we're just kind of not a particularly bullish looking candle, right? Big old gravestone looking candle here right at that support level. If this gives it out, I will expect to see at least a little bit of selling from a broad market perspective. Nothing really has changed. The big level of support to be keeping an eye on, in my opinion, is going to be at that $2,800 mark. I could see if we see some selling, some folks out there are probably going to be looking at this as a retracement. And I know as I was kind of looking through the market, there were plenty of bearish setups out there. I was having an easier time finding bearish ones than bullish ones, at least across the board. Because of the way the market's been moving. So I think we have to be really careful going into next week. Want to make sure from a buying perspective, I'm seeing some upward movement in the stock itself, but potentially even the market, just with how volatile it has been before I get too excited. I think there will be some good buying opportunities out there for us still. On the other side of things, if we see some downward movement, that would be a short-term sell signal, but we would be breaking those intraday support levels. We'll be taking out, yesterday's low, making that lower low, so to speak. So we're kind of in a weird little spot where we need to continue to be very careful, I think, as we move into next week. Not particularly clear signals one way or the other right now. We'll just take a quick peek at this weekly time frame. It still looks a little bit like it might be a little bit of a retracement, right? Lower high, lower low, lower high, lower low, still in that upward trend. We haven't seen that turnaround candle, right? We're looking at a weekly time frame. So that's going to be interesting, but it does look like 28 is a pretty strong level of support. And that is where my eyes will continue to be looking. Quite honestly, I don't think I'm going to be aggressively bullish again until we take out the highs. Or we go into a downward trend and new exciting things develop. But right now, I think we're kind of in a weird spot. Still have shorter averages to deal with, all sorts of good stuff on top of us in the market right now. And hey, Amy, good to see you. Not a whole lot different over in the Dow. Of course, we never recaptured the 50 in the Dow, so we weren't able to give it back here today, but closing right below that 9 EMA. Again, it's not necessarily textbook, but I could see the argument for this is a little bit of a bearish retracement if we see some downward movement in the market. Now, much like the S&P, this support zone down here at 25.2 is still kind of, as long as that stays there, I'm not looking too terribly bearish. But now we can kind of start to say, well, if we see more selling next week and we take out these support levels, well, now our trends are going to be clearly showing us lower highs and lower lows, right? So I think we've established some pretty important levels of support in the market this week. On the other side of things, just lots above us on the Dow Jones. So we want to be continued to, this is a very mixed area. As you guys know, Caterpillar really, sunk here today after John Deere missed on its earnings. Usually John Deere and Cat are good buddies when it comes to trading. They tend to run the same way. And the poor earnings on John Deere definitely did not do our old friends in Cat any good here today. Here's John Deere. Certainly not a Dow component, but big drop on earnings, really heavy volume. Cat, of course, a Dow component, didn't want to be left out. It's a pretty scary looking chart from at least a bullish point of view, making yet another low here. So, but you still have, some of the, nicer areas like the Travelers and even something like UNH, showing some interesting reversal characteristics. One of my favorite type of patterns where you're in that downward trend, you work up, create a higher low, and then try to create that higher high. So it continues to be a very mixed market, in my opinion, out in the Dow Jones and overall for that matter. So I think we want to continue to be careful. Resistance, really, we have lots. The 9, the 50, price-wise at 26.2 is what I'm going to be looking at. We all know the history that we have there. Over in the NASDAQ, very similar type of candle, gravestone. Let me just move this so we can actually see it, closing right below that 50-day moving average like the S&P. So we're kind of in that same location. If we can get some upward movement early next week, should start to trigger in a few more of the bulls. If we see some downward movement early in the week, my concerns are, at least short-term speaking, some bearish retracement type of traders look to jump in. So we're kind of right at that old area. Let's see where this one goes. Again, tough market for planning for Monday. We have to be ready for, I think, both sides of the equation on Monday morning with where we find ourselves here tonight technically. The rut, certainly, and this is my concern. We talked a little bit about it. Some people might be looking at this as a bearish retracement. Yesterday, well, it was more than some. It wasn't me. It should have been, but it was certainly some. Quite a bit of selling, and that's my concern. If we give out those lows here early next week in the other indexes, traders say, hey, there's some bearish retracements for us, and at least short term can lead to some selling. Certainly a pretty bearish day here today. Our support level, of course, can be down here at about 1520. If this does give out, that is a pretty bearish signal short term. Now, I'm still overall sideways within that approximately 15 and 16 range. But if this support zone does give out, there's really not a lot until 1500. So I would expect if we test and fail at this support, working towards 15 is probably not going to be that difficult of a task. So that is where we find ourselves on an index point of view. Hey there, Scott. Good to see you, buddy. Hope you are doing well. Kind of in a tough spot. We really are. It looks like a little bit of upward movement could trigger some bullish entries. A little bit of downward movement could trigger some bearish entries. We've got the uncertainty of the trade war stuff that who knows what Monday morning has in store for us, but good chance we're going to gap one way or the other based off of the way we've been performing. So, we just continue to trade what we see. Don't feel like we have to make snap decisions, have those game plans laid out because, well, so many times the snap decision, oh, it gapped down, let's go bearish, and then it rallies, right? So let's stick to some plans here. But we're kind of in a weird spot from a broad perspective. There's no doubt about that. It's certainly more of a neutral, could go a lot of ways. We're kind of stuck between what I believe, some pretty key support levels and some resistance levels with a little bit of intermediate choppiness. And so that's always the toughest market, in my mind at least. Still a good market for credit spreads. Out of the money credit spreads, in my opinion, that's the way I look at these type of markets. Generally, I'm kind of, you guys know me, I'm kind of on the more conservative side of things. As we move into the material sector, are able to hold up at this support zone again today, but we've talked a little bit about this before. This is a tricky place, and let's go in and look one more time at some of these big names. This is a tricky place. One of the more interesting ones in my mind. Where are you, materials? You'd think I'd get used to that, but no, you still have, really troublesome things going on with Dow DuPont from a technical point of view. But on the other side of the coin, you've got Lynn, one of my favorites out in this space, that's carried over its breakout from yesterday, and so there's a very, very mixed bag. Something fairly neutral, but still overall, I would say more bullish than bearish on Echo Labs. On the other side of it, you've got Sherwin-Williams that maybe a little bit more on the bearish side than Echo Labs. APD, another one of my favorites in this space, knocking on the door of a breakout. PPG, potentially a bearish retracement. So as we look at the companies within the material sector, I don't think we're likely to be getting a tremendous amount of help from the sector overall, simply because of how different some of these charts look. Some of them pretty interesting from a bullish point of view, some of them pretty interesting from a bearish point of view, in my opinion. So that is an interesting sector. Probably not looking to use the sector ETF as a vehicle in those type of conditions. I'll tend to kind of look towards the individual components during those type of market conditions. On the actual ETF, though, again, we've talked a lot about this 54 zone, and that continues to be that support zone that I think we should be keeping an eye on. If that gives out, that probably means some of those more bullish looking stocks within the sector are starting to show some signs of weakness as well. But we are holding it here today. Not, we got lots of little things, but not any real price resistance until we get back into that 56. So approximately 54, but really it's a mess, right? Do we use the actual low? Do we use, what exactly do we use? That's a tough call. It's just going to have to be, for me, the 54 zone right now is the support level that I think we want to be keeping an eye on. And good afternoon, Whitney, and hello there, Patricia. Yeah, I'm looking forward to a nice little Friday here. Go hang out with the other coaches in the scouting report meeting here when we wrap up, see what kind of shenanigans they found. Always a good time. Energy, want to take a closer look at energy here today. So we've worked back into that resistance zone yesterday. We've talked a lot about this little sidewaysy situation that we've got going on, and how potentially a break either way could be a signal. Break to the upside to buy, break to a downside to sell. I think that is still true. We're still kind of in the middle. If we go in and look, though, at some of the big names within this space, it leads me to believe, and I've kind of been, I think, kind of open about looking for the breakdown more than the breakout. You have an Exxon, sitting kind of on a, breakdown consolidation right below that 200. If this floor, let's just steal you, this floor gives out, I would call that a sell signal. Personally, I think most people would probably agree with that. Chevron, not quite so rough, but really struggling to break back above that 50 period moving average, not instilling a ton of confidence in my mind. ConocoPhillips that could arguably say that we're a downward move away on Monday's open to be getting bearish retracement traders into it. My favorite bearish energy stock, for whatever reason, is always is usually EOG, and so very similar to PSX. Saw some downward movement here, kind of hanging right at the very last line of some short-term support. So as I kind of work through Oxy, kind of nothing really to say about them. They just continue to sell. Already broken down over in SLB, working back into that 9 EMA. So as I'm looking at the individual components out in energy, it really makes me question the likelihood of it being able to break back above that resistance because there's just not a ton of strength going on. I think KMI, they're usually one of the more midstream type of things. They are holding their break, so there's a pretty looking, or at least a decent looking chart in there. But so many of these energy stocks are looking a lot more, in my opinion, likely to be bearish than likely to be bullish as we kind of fight within this range. Leads me to believe if we do get a break to the downside, there could be some interesting opportunities. Till we get it, though, it's just all thinking ahead, right? So, but a very interesting spot, at least to my eyes, looks a lot more likely to break to the downside than to the upside with the way that many of the components within that space are looking. Over in the financials, holding its own, continues to be an area that I like. This is one of those areas. This and staples are two of my favorite potential bullish areas going into next week, especially when we're looking at anything but the banks. The banks are actually the least appealing looking charts in the space right now. Bank of America kind of just hovering around a support zone, but that's not a very bullish looking chart. Wells Fargo knocking on the door of breaking support, and certainly not been lighting the world on fire, showing a lot of relative weakness. Really similar situation on C. So a little bit of downward movement, broad market or within the sector or just the industry within these banks in particular, could start to show some weakness in this space. The insurance companies, the asset managers, most of the other companies, I mean, there's always somebody who looks good and somebody who doesn't, but more of those companies look appealing to me than the actual banks themselves. So that's going to be something we're going to have to keep an eye on next week. If these banks do break down, and they haven't happened yet, right? They've held support all week long, so doesn't mean they're breaking down on Monday by any means. But I did think that was interesting, that they were kind of the least appealing of the bunch of those financial stocks. But I still really do like this as, if we see some upward movement in the market, is an area that overall I do like. On the resistance level, I think we have to keep an eye when we work back into that 2750. As a potential resistance catalyst, if we can push right back through that. And there's some room between where we are and where that is. So even if it holds, there could be some bullish opportunities next week. But if we can push back through that, I will see that certainly as a sign of strength. I mean, really, while I don't like these type of pullbacks, in my opinion, this is still very much a bullish retracement. Hasn't really done anything, quote unquote, wrong, in my opinion. So continues to be an area that I like a little bit more from a bullish point of view. On the other side of things, we have the industrial sector that wasn't able to carry over yesterday's momentum on that break of 75. A little bit concerning. Of course, you've got CAT. We looked at CAT, but you look at Boeing. I mean, that's kind of a pretty scary looking chart. A little bit of downward movement there. I would expect, I wouldn't want to buy this chart. I'll just put it like that. So, after a recent breakdown, this is an area I think we still have to be very careful with as well. Not showing a lot of strength overall. Yes, there's going to be some interesting companies. Now, if we can get back above that 76 and reclaim that, I do believe there's room for us to work to 77 relatively easily, but that might be a little bit of a battle. On the other side of things, 73 continues to be the support zone. If that gives out, that probably is a pretty strong signal to the downside for me, at least. And again, this could look like one of those, a little bit more downward movement, could look like a bearish retracement. If we just look at this, chart and say, hey, there's our chart here, we're making, lower highs and lower lows. It's not maybe your favorite looking candle, but I have my concerns if we see some downward movement that could CAT's already in a kind of a falling phase. Boeing looks to me like some downward movement could trigger in some bearish retracements. I think that's what we're going to be, worried about, from a bullish point of view going into next week. From a bearish point of view, could be interesting now that we're back below. If 75 or 75 is going to continue to be resistance for us. There is room down to that support zone, so it could be an interesting area for us next week. And hey, Thiago, good to see you, buddy. Hope you're doing well. Over in tech, one thing I thought was interesting here on tech, as I was scanning through the markets, I really wasn't finding great technical setups in technology. It wasn't that the charts were bad. It's just that they weren't you missed for me, you missed the entry, right? So they're more kind of jumping in a little bit later, across the board. So I was a little bit surprised that there weren't too many interesting tech companies out there that I thought were worth adding to a watch list this week. There were a handful, and certainly there's always some worth following, and new things can develop by the time we're on Tuesday or Wednesday, right? But just for early next week, I was a little bit surprised. Really going to need to keep an eye on this old resistance zone. We were, much like the market, we closed right below that 50, a little bit of a gravestone in a very interesting spot. A little bit of upward movement gives us a break, recaptures everything, including that recent all-time high. Should be a pretty decent signal. A lot of these stocks still look okay, in my opinion, just maybe not for a new trade on Monday morning is all, but Microsoft knocking on the door at resistance. We actually kissed that swing high here today. Apple holding its own, but not loving the way it's behaving. Visa knocking on the door of a break. Intel, we all know the story there. Putting together a little bit of a floor, probably just waiting for it to give out. So Cisco, on the other hand, building off of yesterday's momentum. MasterCard working into those highs. Oracle continuing to work into some highs. So it's not that it looks weak. It just doesn't look like perfect, great trade setups early next week. So I think we keep an eye on that 76 mark on the ETF itself, see if we can reclaim that as we move into next week. Still like this area, but gonna like it a lot more. Again, my concern is this a bearish retracement? And I don't know the answer to that, or I would happily tell you. On one hand, I think it would be very healthy for us to get some selling early next week. And then either, we just work back down and break support again, or we create a higher low and then take another run. That would probably create more easier to trade bullish opportunities for me, at least. But we'll see if we get that or not. Staples continues to show well, in my opinion. Certainly not immune to the selling and the general activity of the market here today. So, gap down, run up, come off of the highs, but still closing, very close to this old breakout point or old resistance level that we had, still above all of those moving averages. Still don't have a lot of resistance until we get closer to that $59 mark. So I continue to like this area personally as one of those bullish areas that feel a little bit better. Something like Pepsi held up very nicely here today. Closing just, 130.50. So things are still looking decent in my mind over in the staples. From a support point of view, really it's going to be down here. Nothing really has changed on that side of things, down around 56.20 / that 50-day moving average. One of the few areas that we're still holding trend. We're still seeing the rising 9 above the rising 20. Moving average is stacked kind of the right way, so to speak. So it continues to be an interesting area. Knocking on the door on utility. So if we are interested in the utility break, I think this weekend is a good time to go look for some potential candidates. You had PEG. That was one that I thought was interesting. They had kind of just broke out here today. You had AEP that was kind of right there along with the ETF. It looks like it kind of sold off of the daily high, but a little bit of a breakout. So there are some, utility stocks out there that have already either broken or kind of knocking on the door. I'd like to see that sector ETF get through. Of course, it's utilities. It's not going to be every swing trader's favorite thing. And hey, until we've broke it, let's assume it's not going to get broke, right? But when we're this close, probably not a bad idea if we are interested in, potentially trading into the breakout to start getting a few of those candidates on our list. There are certainly a few out there that are looking fairly interesting for utility stocks. Another weird day, another weird close. Let's start on the weekly chart here on healthcare. Honestly, it's looking a little more bullish than I thought as I was going through individual components, right kind of in the middle. Now, if we give out that low from last week, that could change things quite a bit. But as it is right now, still in a really weird spot. right? We're kind of stuck between all sorts of stuff. We've got some what we know to be potentially some pretty decent resistance just north of 89. We've got at least some short-term support here at 87. We're hanging out just north of 88. These moving averages continue to be weird, right? For a while we had the old ski slope where our 9 was skiing on top of the falling 20, which does not happen a lot. Now you have that 9, I'm sorry, that 20 crossing back above the 9 and so it is in a weird spot. A slower moving average crossing a faster. You see fast crossing slows fairly regularly, but slows crossing fasters is fairly rare. So it's still in a weird spot. But let's go take a peek here. I really thought that the UNH chart was looking pretty interesting as a reversal. Personally, you've got things like J&J. We've kind of talked about working off of its 200, kind of a murky looking chart, but showing some upward movement. Same general problem. A lot of things in the market have lots of moving averages, previous swing highs, and trend lines and stuff sitting on top of them. UNH working right into, that's a pretty interesting pattern. Let's look at this one on a weekly. See what that looks like. I mean, that really looks like it's building up quite a bit of oomph. So one of two things happens here. Either we give up on resistance, we push through it, generating a potential at least buy signal, or we give away on this upward trend line, giving us a little bit of a sell signal. So it's in a really interesting spot. I think this is definitely one that's on my watch list going into next week. That is for sure. So, a little bit turn around, not nearly as bearish. Maybe it'll sell, who knows, right? But certainly doesn't look nearly as bearish as maybe it did not too terribly long ago. Pfizer kind of working up, creating higher highs and higher lows. Yeah, it's got some challenges like so many other things, but it does. Merck potentially, type of a breakout candidate above that swing high. If we do that, we've created higher lows, created higher highs, broken back above the 50-day moving average. AbbVie, well, we can say they've held support. I'm not going to trust them yet, but they've held support. MDT, kind of yucky, little, ugly type of bearish retracement. So as you kind of see here, here's an interesting one. Amgen, though, testing that old breakout point as some current resistance 2 days in a row coming off of those highs. That one's an interesting looking bearish candidate in my mind. You've got Abbott that's kind of like Merck, where we've created that higher low and either we work up and create a higher high, or we've work down and break that support and probably work our way back to the 200-day moving average. So it is a weird place. It really is. There's opportunities out there, but I do think, much like we've kind of talked the last 2.5 weeks or so, got to be very careful working with the healthcare sector right now. Discretionary, much like the market, gravestone candle type of a day. Lots of earnings out in this space going into next week, as we saw on the open here, as we got together here today. So going to be an area that I think I'm cautiously going to be looking at from a bull, but with all of the earnings, the added potential volatility, along with everything else, probably going to look elsewhere for the most part, not exclusively by any means. We were able to kind of sit right on top of that 50. You have to give that a little bit of a positive spin. Again, much like the overall market, a little downward move. Is this a bearish retracement? A little upward move. We've recaptured things and probably are trying to work our way back into that 118 zone of resistance. So we'll want to keep a close eye on this one with all of the earnings next week. I think we have to be very careful, much like the market. Is it a bearish retracement? It certainly hasn't, according to my rules, triggered. So I can't say it is one yet, but that could change with a red candle on Monday. So that'll be an interesting one. Over on real estate, knocking on the door of that break. So much like utilities, if this is something we've been looking for, probably now is the time to start finding candidates out in this space. So if we do break out, we're ready to go with the market, right? Has not happened yet, may not happen at all, but we certainly had some nice movement into that resistance zone, kind of recaptured all of our moving averages the right way. Probably ideally, we kind of spend a little bit of time between resistance and the 9 and then break out, say on Tuesday or maybe Wednesday. That would probably be an easier signal than if we break out on Monday, but knocking on the door of that resistance, there is no doubt about that. And lastly, over communication services, just like everything else, gravestone doji type of a candle here today, kind of hanging right at the lows from yesterday. So again, it's tough. It could be one of those that, yeah, if it drops, that's a bearish signal. If we break back above the 20, I would definitely call that a bullish signal. Just have to see which one happens first. Before we get too crazy, looking at some of these components, of course, we all know how important Facebook and Google are to them, but Facebook's putting up a good fight off of that 50. Is kind of in, it's in a zone where, yeah, it makes sense that it's having a challenge with all of those moving averages. Google had a really nice last couple of days and relatively speaking held its own here today. Verizon, nice movement over in Verizon here today, pushing back above, some short-term moving averages. Tim's favorite internet and cable provider, Comcast, showing, well, working into resistance. Charter carrying on yesterday's breakout here today. Disney, I know some traders are interested in potentially trading into Disney if they can get a little bit more upward movement, maybe above that 136. I know that some people are looking at that. AT&T, strong movement, getting closer to some resistance, but some very strong movement. Our poor friends at Netflix, looking a lot more like a bearish retracement. Most of these companies actually look fairly interesting from a bullish point of view. Then you see Netflix and think, yeah, that's not very interesting from a bullish point of view. Maybe from a bearish side of things. EA, one of my least favorite companies out there, hasn't really been able to do much, but did have a good week. So as you work through this, I still think there's more reason to like the individual components as a bull than a bear. Right now, for the most part, we will see where this one goes. Much like the market, Monday could be really interesting from potential entry points, in my opinion. So there we find ourselves on the sectors as we move into the to the VIX. A little bit of a spike here today. Hey, doji at the rising 20 on the VIX. Let's expect it to go up next week, right? No, it's not exactly how the VIX works, but simmered down a little bit. But as today's open and today's intraday, action showed, that volatility is just not going to disappear until it does. We'll get more used to it as time goes on, but it's still too fresh right now, in my opinion. And so any trade news can, on either side, can really get things cooking on the open for the day. Nice follow through here on the dollar. I want to come to this weekly chart because I think this is a really interesting one. Reclaiming that breakout point, working right into the top of those highs. I'm just going to steal you because why not? We haven't hit the high, but we've hit the body of those two candles. A little bit of upward movement. I think you really have to like the dollar. I think the real question isn't, are you bullish on the dollar? I think the question is, how do you want to play it? Are you looking to, position trade it, or are you looking to swing trade it, or are you looking to day trade it? From a position point of view, which is kind of how overall I'm looking at the dollar, still kind of want to see it take that out, but we're right in that ballpark. There is no doubt about that. And good afternoon, Jasari, great to see you, my friend. I hope you are doing well. So we're knocking on the door of resistance. A great week for the dollar here this past week, no doubt about that. Let's just kind of see if we're able to push through those body highs on the weekly candlestick. That should be an interesting move. But overall, looking for reasons to get into the dollar, and certainly as long as we're holding that 50. Kind of like we said before, I guess I should have been looking at that as an entry point, but anything above that 50, I understand, as long as it fits into what you do personally, any reason is a good reason in my mind. On the other side of things, any hope that we had of a potential development on gold yesterday was completely taken away here today, still leaving gold alone. Certainly some downward movement here today, working back into that support zone. That break of support is potentially the signal, but what we kind of want to see is it's something develop in there. So it continues to be a very tough place to play. And even as it is right now, if we were to create some start moving up next week, maybe 2 or 3 weeks from now there could be something. Right now, I think you just leave gold alone, as I've pretty much felt for quite some time now, unless you're day trading, in which case you probably, for the most part, are loving gold, because there's been plenty of movement as of late in gold. 13 as resistance for me, and this 1268 or so as support for me. anything in there. I was hoping that we were going to develop in here, spend a little bit of time, and then ultimately break one way or the other. But with it happening so quickly, I don't think that, for me at least, that's not a signal that I'd be comfortable trading. Silver, on the other hand, a lot of weakness, really a ton of follow through off of yesterday's candle, breaking cleanly below 1450. And while it wasn't a huge deal, it was something, and silver didn't even care. He's like, yeah, whatever. So closing well below that. Really on the support side of things, you probably, in the way I'm handling it, because we've been in all of these places, a time or two on silver, 14 and a quarter is kind of that next level of support that I'm going to kind of be looking towards. A little bit of a retracement could present some new bearish opportunities. Certainly more bearish. We've talked a lot about it. I've been leaving both metals alone, but I still believe that if I'm looking to trade metals right now, bearish on silver is where to look. Leave gold alone and work with silver. Not been well behaved, but certainly it repaid people who said, well, it hasn't done anything wrong either. So quite a bit of movement to the downside to close the week out over in silver. Natural gas, going to make it real interesting. So we got to zoom way in here. We talked a lot about this this week, because this is an interesting place that natural gas finds itself. Was not able to break the 50. We tested it on 3 different occasions this week, working into that 50 and failing. On the weekly, which is what we're looking at on the 9, we have a doji right below that 9 EMA on the weekly. If we see some selling, if we push to the upside early next week, if we gap to the open and can run, that could be interesting. If we see some downward movement, this looks a lot more like a bearish retracement, and the bearish retracement opportunity, if we want it on natural gas, than this did to me. Even though the price isn't a whole lot different, that would be now we're working with some longer term moving averages, well, time frame wise, weekly moving averages, failing at the 50. Going to need to see it kind of flip around before any potential entries. But now, if we do see some downward movement, and that's a tough fight, that 9 weekly is hard to break. It doesn't mean it won't break, but it is a tough fight. So if we see some downward movement, well, now we have this open space, if you will, from the current trend, which is kind of see that trend line I have drawn there. There's really an empty space in between. So if we see some downward movement, that could be an interesting opportunity. I still think we can't say that it's broken down, and anything that we look to do has to reflect that 250 is holding, and until it's cleanly given out, you should expect it to continue to do so. That is certainly at least how I will be looking at it. I could see some interesting opportunities potentially next week. I mean, we're smack dab at that 9 weekly and this 50-day moving average. Some movement either way, movement to the upside would be a fairly interesting, although we'd need to close above that 9 weekly. But let's go back into natural gas really quick and look at, the last time we were able to recapture that 9 weekly. So we really kind of struggled. So we, again, very similar, went back and tested this old zone. It was way back here last March. So that we kind of rallied up into that 9 weekly, and it pushed us down. When we were finally able to recapture it, we actually had a nice little run. And if we can capture that again here going into the now summertime, could be something to be looking at. Now, it's a hard fight, right? It took weeks to win that battle. So that last spring. So let's not expect it to happen on Monday morning, but I think it's in a really interesting spot. If it can recapture some downward movement, that looks an awful lot like a bearish retracement if we see downward movement, to my eyes at least. And lastly, over in crude, working back a little bit. We did take out yesterday's high today, but we're ultimately giving it back. But now let's go again. Weekly chart time on this. Little bit of a pullback, bullish candle. If we can take out this weekly high, I'm going to look at that as confirmation of the trend. We do need to take that out, in my opinion, from an entry perspective. But if that is the way that it goes, if we are able to take out this weekly candlestick high, I'm going to say that's a confirmation of the weekly retracement, bullish retracement on crude oil. Ideally, it's 1 or 2 more days. This 9, again, we talk about it a lot, but I want this 9 to have a chance to catch up and start propping us up as support. So a little bit more time would not be a bad thing. And I'm certainly not unhappy with the close that it had today, because that set us up, I think, a little bit better, potentially at least for next week. So that is where we find ourselves. We can't say it's boring, right? It has definitely been an interesting week in the market. Some good movement, on midweek, ton of selling Monday, little bit of not great candlestick development here today, but we're going to almost hit the reset button with the news on Monday morning, probably. So as we're kind of just peeking ahead to some of the things I was finding out there, basically, as you'd expect, it's a complete mixed bag. APD, certainly going to be on my breakout list. I've said this many times. I'm always really just looking for a good reason to buy APD, because it's talked me into it over the last several months to do that. CPE, potential breakout candidate as well, a little further away, potential breakout candidate as well. But APA, potential breakdown candidate. So this is materials and energy, because that's how FinViz likes to do it. CVE showing pretty bearish signal, giving out a little bit of a floor here today out in the energy sector. Same with NTR, and of course in the material sector, taking out a little bit of support. Ford, still really like the Ford play from last week's stock report. It might have been 2 weeks ago. I know I've been watching this consolidation period and waiting for a break to the upside. You have a kind of an interesting looking, gap down on earnings, rally, backfill into a potential trouble area on ELF here. FBHS, something that's been holding that recent breakout, holding its moving averages. OI on the other side of things, a little bit of a bearish retracement look to me. PG holding its bullish breakout. So that's really the type of market that we're in. Some of these things are looking, very interesting from a bull side, all within, the same sector. You're finding things on both sides. Some interesting breakouts. AJ Gallagher here knocking on the door out in the financial sector. AXP just continues to be strong. Our banks, as we kind of talked about, if these little floors give out, that's going to concern me. Another bearish retracement on Ben, but another bullish breakout candidate on CB. And so that is kind of the moral of the story around the board. CVS holding its support zone, but certainly on my bearish breakdown watch list. Amgen, I think we looked at them a little earlier, testing that old breakdown, that old support level. FGen really just kind of tanking. Nectar testing a support zone. So certainly a little more bearish, but then you see things like UNH. I think that's a potentially, an interesting development going into next week. Certainly a potential turnaround, if nothing else, if not a tradable one. X-ray still kind of hanging off of its recent earnings gap, waiting to break out. And you get to the industrials and Boeing retracement, CAT's really struggling. DHR certainly kind of working towards the top, although not quite as pretty as it was when I first started following them. Tim's favorite GE got a pretty clear level of resistance on it. MAS, let's see here, another bearish retracement type of candidate. So, it is really across the board where, Costco is a nice breakout out in the discretionary, but then Etsy is a bearish retracement. That's really where we're at. McDonald's threatening to break out, DRI threatening to break out, New York Times threatening to break out. So lots of charts out there, lots of interesting things on both sides of it, in my mind at least. Not as perfect setups as across the board as you always want. There's definitely some interesting ones out there, though, in my mind. So should be fun getting into that scouting report meeting, see what the other coaches have found, see what they've tried to kick away from my list, see what I can talk them to putting back into it. So, ladies and gentlemen, that will do the market recap for today and for the week. But it was certainly interesting. I certainly appreciate you hanging with me during this more volatile week as we kind of work our way through. Always more fun to go through this process with you guys than on my own. So thanks for hanging out. It's always my pleasure. Appreciate your time. If you are new around here, of course, be sure to subscribe to the channel, hit that notification bell. Join us over at Tackle Trading on Twitter. You can, of course, find me at Frank Martin 23. We've got our Mind of a Trader going on here tonight at 8 p.m. Eastern for all of our pro members. Cody Potter's going to kind of work people through his daily report card. That should be really interesting. I understand the difficulty in staying organized. Much like Coach Noah, that is not my natural state of things. And so this should be an interesting, maybe I can steal a couple of ideas there as well. So enjoy that for all our pro members. Of course, if you're not a pro member, you know the drill. You're always invited to come join us. We got a 15-day free trial we can get you hooked up with. You can check out that Mind of a Trader tonight, get our scouting reports out to you here tomorrow, as well as the newsletter. So we got a busy weekend planned for you guys. As always, guys, have a fantastic weekend. Be ready to rock and roll. Be ready for just about anything on Monday. In my mind, with where we're at in the market, the wind could blow it one way or the other pretty easily, in my opinion. So be ready, but of course, spend some quality time doing some fun things with the people you love this weekend as well. So thank you all so much. It's my pleasure. You're all very, very welcome. You guys get out of here. Have a fantastic weekend. I will see you same time, same place here on Monday afternoon. Thanks, everybody.